Hi everyone, welcome to our Ask an Accountant webinar focusing on moving from employee to solo practice. Before we get started, I just wanted to share a few notes about this webinar. You will be receiving the recording and the slides from today's webinar in the follow-up email going out tomorrow morning. Also, if you're having any technical difficulties throughout our webinar, we suggest to refresh your GoToWebinar page and re-enter the webinar. Without further ado, I'll pass it over to Edie Gardner. Edie, would you like to take it from here?
Sure, thanks, Nick. So hello, everybody. My name is Edie Gardner. I am going to be presenting my third presentation in our Ask an Accountant series. And the title of this presentation is Going from Employee to Solo Practice. So even if you are not new to owning your own business, even if you started your solo practice a long time ago, I still think you're going to find some tips and tricks that are going to be really applicable to your practice today. So let's see why it won't fast forward. Let me Okay, here we go. So just to give you an outline of what we're going to be covering today, we are talking with people who are in helping professions. And one of the best things that I did when I started my business was to have a ton of respect for forming my own company. So that's how I worded it. I'm going to get in that in a little bit and why that's so important. Then we're going to talk about the ideal way to start your own business. Even if that's not how you started your own business, there's still some things you can put into place to kind of replicate that. And we're going to talk about making a mind shift. So I have to be really careful when I'm working with my group of therapists, because typically I find that there is this notion about over-serving and not really recognizing our true value in the work that we do. So I want to make sure that we're not over-serving at our own expense because of maybe some limiting money habits. My last presentation was on how to have a profitable private practice, and I talked a lot about the psychology of money and how our own childhood relationships with money from our family of origin really do affect how we do business today in our own private practices. So we're going to learn some ways about breaking the cycle, okay? And then we're going to talk business talk. We're going to talk about taxes, salaries, and accounting, and all of that talk is going to be based on your questions. So when you registered for this course. So in 2012, I started my own company. At the time, it was an accounting company. So prior to that, I was a stay-at-home mom. When my kids got a little bit older and they were tired of me helicopter momming, during the school time when I wasn't needed, because really my day began after school with all the activities, I started my own company. And that is how I said it from the very beginning. Even though I only had one client for a very long time. Now remember, in 2012, this was an accounting company. So I am this weird combination of a CPA. I got my CPA license and was an accounting major prior to any kind of helping profession, but it was always the dream to have my own private practice in counseling. So that I knew I was going to get there. I just took a little different path than most people. But when I started my own business, kind of as a side thing, while my kids were in school, I really didn't tell people that I just was doing some work on the side. I really made sure people knew I started my own company, because I felt that the respect that I was giving, almost like my third child, that this was a full-fledged company. I'm still a one-woman show. I don't have employees or anything, but that mindset was really critical. So I put on here on the side that I started my own business is a very empowering belief. I think we really do teach people how to treat us. And when we respect our business, I think other people just fall in line. So the mission to my business, the mission behind my business, also allows for me to benefit from my business. And I find that that might be the tipping point for some people who are starting their own business, who are in helping professions, is at the core of their business mission, they don't value themselves enough to be able to benefit from their business, okay? So that creates some real money issues when they're practicing in their own company. So those in helping professions do tend to overserve at their own expense. So what we're going to learn how to do is to be a business owner. So a one-person business can really have huge impacts. But first, what we're going to do is we're going to grow it organically and slowly first with our own private practice. And then we're going to get a little more complicated if you want, if that's part of your mission. But if you don't want to, you don't have to take on more employees or anything. This is your company. So when you value your business and its mission, you start to invest the time and energy into the books of your business. Most people that I meet do not want to talk about the numbers of the business. One, for the reason that they don't really know how to talk about the numbers in their business. But the other part is they don't see the value in it. People have this very misconception about what bookkeeping is and don't really give it much respect. So I can really understand why people want to have free accounting programs and software programs, because they don't understand the value that there really is. But if you have the respect for this being a full-fledged business, I think you're going to put more energy into making sure that the numbers are good numbers, big numbers. Okay, so if we were talking the ideal situation on what would be the best factors to set you up for success in forming your own business, it would be to start slowly. Okay, so I'm going to give you the ideal, but it really is not too late to change by putting some of these things into place. So if I had my magic wand, you know, the miracle question, if I had my magic wand and could create whatever situation I wanted for people starting their own private practices, I would say first, do it slow and steady wins the race. So start it on the side. Now that is if your salaried position, your full-time job allows you to be able to have other work. Sometimes you're precluded. Also, if you have a not competing, if you're not competing in the same with the same clientele and there's no conflict of interest, you have to make sure that those things are in place. But if you're allowed to see clients on the side and have your own side business, grow it organically, slowly. Okay, so on the side first by keeping your day job. All right, so it's lots of work. I've just asked you to increase your workload hugely because you're still working the full-time job, but you make better business decisions when you do not have the stress of depending personally on a certain level of income with your private practice. If you are growing it slowly, you're not depending on that income in order to meet your personal budget, okay? So when I first started, I may have made some decisions that weren't the best for me in terms of taking on some accounting clients that really they weren't the best ideal clients for me to take on. It wasn't really challenging work. It was it just wasn't the best clients, but I really was hungry for taking on clients. And so I learned I learned the hard way, the very, very difficult way, that I have a very difficult time saying no. So once I've taken on that work, it was really tough for me to let go. I still have some of that work. It's now 2022, so 10 years later, I still have some of the work that I originally said yes to because of this inability to say no. So if you have kept your salaried position, you're going to make better business decisions. You may focus more on the kind of work that you want to do, maybe particular diagnoses that you want to work with, or particular therapies that you want to work with that you don't get to do in your salaried position. So you're going to have flexibility and freedom if you start this slowly. If when you're starting your business, I really want you to stay away from making full-time commitments, okay? So start small by not taking on a lease. So if you want to rent a place, if you don't do telehealth and see clients face-to-face, you may try to come up with some creative ways of maybe part-time renting some space. I have a colleague who is now renting a space from another colleague just 2 days a week. And so you have to think outside the box, but I don't want you to get really locked into a lease yet. I don't want you to be locked into large expenses, large commitments. I really don't want you taking on employees or independent contractors yet, because we're going to grow this small. If it's not done small and trying to do everything all at one time, then you're going to be setting yourself up for success. So you want to eventually be able to have a steady stream of referrals and income that match your day job. So people always ask me, when should I stop working at my full-time job? Well, you want to take into account what your salaried position is really paying you. So it's not just the salary that you're taking home, it's also all of those benefits, which can be very, very huge dollar-wise. So you have to really consider what kinds of benefits you are getting along with your salary to be able to quit that job. You have to be able to meet that, not only in terms of income. So you might say, okay, well, the last 2 months, my private practice has taken off and I was able to match my salaried income. Okay, but that was for 2 months. What about the future? Do you also have this steady stream of income? If you take insurance, have you gotten on some insurance panels that are really giving you lots of referrals? Or if you don't take insurance, or even if you do take insurance, do you have some kind of consistent referral network? Like, do you meet with psychiatrists? Do you have some kind of, sometimes people get a steady stream of income from their salaried positions, like you might work at a hospital and have a particular niche, like maybe eating disorders, and get a steady stream of clients that way. So it's not just that you want to meet your income from your salaried position and benefits, but you also want to make sure that your future is set up for that consistency. Okay, something just really basic that you have to do when you start your own business, particularly, well, you absolutely have to if you start an LLC, but even if you're a sole practitioner, I want you to get an EIN, which is an employer identification number, because you're going to, as a business owner, you're going to be asked many times for your a W-9, which is just being able to say, okay, it's either your tax ID number, which is usually your social security number. But if you have filed with the IRS to get an EIN, you can use that number instead of having your social security number out there. So I really want you to get an EIN. And then I want you to get your own business checking account. And it does not matter how small your company is. Even when I was only had one accounting client, I opened my own checking account. We definitely want to see a separation of church and state, is what I say. Your personal is here, your business is here, and the two don't meet in terms of commingling expenses and income, okay? So I'll talk a little bit more about that, because that does not apply to salaries and to seed money investments in the company. So we want to keep our personal and business accounts separate. You can add seed money to your company. That's investments in your company. And you can take a regular draw, which is kind of your salary, but you don't pay personal expenses on your business account and vice versa. All right, I'm going to go into that a little bit more in the accounting part. We want to make things simple. So if you don't know about S corporations, don't start them yet. It's okay to not start right away as an S corporation. This is probably a good time when you started your own business to think about having some help in the preparation of your tax return. It's a nice transition. You may have been doing your own taxes for a very long time and had no problems, but this gets a little bit more complicated. Even if it's just a simple Schedule C, which is the Schedule C is part of your personal tax returns on your Form 1040. Even if it's just a simple Schedule C, you might want to just consider that you can have some help in the preparation of your tax return, okay? And we want to make sure that you are really seeing a professional and not just somebody who kind of does taxes on the side. Just want to really make sure you're seeing an expert. Again, I'll talk about that a little bit more. Okay, so I just want to throw this out there because in working with many of you who have met with me one-on-one since my presentations, I am seeing that there is a bit of a block on being able to succeed in a helping profession. So this whole idea of being able to be paid well for the services that you provide as a helping profession get a little squishy sometimes. So I always like to ask my clients to finish this sentence. The more money I'm making in my business, and then how do you finish that sentence? So I finish that sentence, the more money I'm making in my business, the more people I'm helping, or the bigger impact that I'm having. And so I really like to zero in on how you answer that question. if you see a positive relationship between the help that you're doing and the money that you're making, then we're in alignment. But if there's any discrepancy between accepting money for what you're doing in a helping profession, then I think we need to talk. Excuse me, sorry, I have allergies. Okay, so things like accounting software programs show us the growth of our business. So what numbers do is they tell us stories about our business. When we can talk in numbers, we can tell the story of how we've been growing. So I really love the show Shark Tank. So you can, if you too have seen Shark Tank, you know that a common question that the sharks answer is, what were your sales last year? And in comparison to prior years, because they want to see that steady growth. If they don't see even, if they see it just the same or a little bit lower, that's a big red flag. It's the same thing with our private practices. If we aren't seeing our numbers growing every year, we want to try and figure out why. Has income severely decreased or have expenses severely increased? Okay, so we all procrastinate, right? I've not met anyone who doesn't have some form of procrastination. But typically, we procrastinate on the areas what we don't know how to do. So in acceptance and commitment therapy, that's called experiential avoidance. I hardly need to tell you guys that, you're therapists. But you cannot be in the dark in certain areas when you are a business owner, okay? So we can't procrastinate, we can't avoid, and the best way to get out of that procrastination is to learn how to do these things. So that's why I'm here, right? Numbers are not scary. They can be this incredible roadmap to you being in control. So when we learn the how-tos of working with the numbers in our business and working on the bookkeeping and accounting and the tax preparation, stuff like that, when we learn how to do our numbers, it reduces our anxiety and then it reduces our mind clutter. Okay, so now we're going to get to the questions that many of you had. We chose the most common questions, all right? And so I'm going to just go through my answers on these slides. So what are some common numbers to know in my business? All right, I love this question. So let's start with net income. What you want to be able to know is your gross income minus your total expenses, and that is going to be your net income. So I really like my business owners to know what their net income was from last month, all right? And then maybe the prior month before that. So if you keep this cycle going, you know what you've done last month. Then I want you to know what you've done year to date, and of course I do want you to know what you've done in the prior year. So accounting software packages, for the most part, have all of those numbers in there, and it's really just the click of a couple of buttons to produce these reports that show comparisons between what you made last year, last month, last year, and compare that to what you made this year, last month, okay? So I do want you to know what your gross income is. Now, your gross income is just all the money that has come in from different sources. And the reason why I do want you to know your gross income, but I also want to know the different components of it. I think it's helpful for you to know if you provide a number of different services. For example, I have a lot of moving parts to my business. I have a lot of jobs where I'm an independent contractor. So I go out on crisis intervention jobs, and I would like to know how much of my income has come in from those crisis intervention jobs versus some online counseling that I do with a company, versus how much I do in my private practice with certain counseling jobs, how much I'm making in as a consultant, as a coach with my therapists who have their private practices. So I want to know what the numbers are, because I want to know what I'm going to start investing more time and energy into, because they're bringing in more money. That also includes, if you do take insurance, it's helpful to know what insurance companies are paying timely, how much referrals you're really getting from them. So it's really helpful to know a breakdown of your gross income as well. Of course, total expenses are really important. because we really want to know. A lot of times we get locked into some automatic expenses just coming out every month. Now the problem with that, if we're not looking at that, is we don't know how much things are actually ended up costing us, and we don't know if we're really using those items and really getting the value for it. Okay, so accounting software programs are able to help you with net income per month and year to date, comparison to other months and years. And you want to make sure if you're spending a lot of time in one area, but it's not bringing in a lot of dollars, then we want to make sure that you're getting the benefit from some of these areas that you're spending so much time in. And what services are working better than others. Okay, the other thing that I really want you to know is your accounts receivable. What's my accounts receivable mean? It means what money is owed to you. So when you create an invoice, like if you bill an insurance company for a service that you provided, you saw a client, you bill them for that hour. That's an accounts receivable until they pay you, okay? So we want to know how much is out there that still remains uncollected. So who owes you, how much do they owe you, and how old is the aging? If you're really staying on a monthly basis on with your money coming in, you can do a lot better in terms of collections if you are addressing it early enough. I also want you to know in accounts receivable, who are your best customers? You may be surprised to learn that one area of your services is really booming, and so we want to spend more time there. And like I just mentioned with collections, and figuring out what insurance companies are more headaches and you're having more trouble with, those are usually where you're spending more time, but they might not be bringing in the dollars. So maybe it might be time to evaluate that. Some other common numbers that I want you to know are your deadlines, all right? So you are now going to be making quarterly estimated tax payments, most likely. I'm going to talk about that in a minute. So I want you to know what those tax deadlines are. Of course, we have tax return deadlines. We also now have some payroll tax filings if you have payroll issues. And of course, if you're an LLC or any kind of corporation, you're going to have some annual state filings. Like in California, if you're an LLC, you have to pay a $25 fee every year and fill out a form. And yet I find, even though it comes in, you get one bill, let's just say it comes in September, people don't pay it, and then that $25 turns into a $250 penalty just after a little bit of time. So I want to make sure that we're really staying up on all of our deadlines. Okay, so if I had to produce my top 5 list of questions, the number one question is, do I have to pay? How do I do quarterly estimated tax payments? And I totally understand why this is a real mystery for everyone, because most people are very used to our taxes just being taken out of our salary, of our paycheck, and then the company, the payroll company, just automatically pays that to the IRS. But now, as a business owner, you no longer have federal, state, and payroll taxes taken out of a paycheck, unless you're an S Corp, and we'll talk about that in a little bit. But the IRS wants their money throughout the year instead of just this big payment at April 15th. When you have withholdings during the year, they're being paid the IRS is being paid throughout the year. So it's the same thing when you own your own business. You have to be making quarterly estimated payments. So I also want to prevent you from having to have this huge tax surprise at come April 15th. So there are 4, they call them quarterly payments, but they don't actually match the end of each quarter. So they are due on April 15th for the first quarterly payment, then June 15th. So you can see that's not quite at the end of a quarter, September 15th, and then January 15th of the next year, all right? So to avoid penalties and interest, you must pay either through withholding. So if you still have some kind of job where you're getting a salary, a paycheck, you have withholding there, you could increase your withholding there, or you have to make estimated payments. And to avoid taxes and penalties, you either have to pay 110% of last year's taxes For some lower income people, it's only 100%, or 90% of this year's tax liability. So this is why I say I think it might be a good time as you own your own business to have a tax professional help you with the quarterly estimated tax payments. Because if you have somebody prepare your annual tax return, they should be preparing the vouchers for your next year's quarterly estimated payments. So you won't even need to worry about it. They will tell you exactly how much you have to pay each quarter in order to avoid the penalties. But just so you know, that's the rule. So let's just say you had $10,000 of tax last year in 2021. So in order to avoid penalties, you would have to pay 110% or $11,000 either through salary withholdings or through quarterly estimated payments. All right. So now IRS.gov is definitely going to be your friend, because you can either mail in these vouchers, it's called a 1040-ES, estimated tax payment, or you can pay through IRS.gov. Super simple that way. IRS.gov is going to be able to walk you through a lot of things like your tax ID number, EIN, and also making estimated payments. Just as a side note, you really want to make sure that you pay through any other way other than credit card, because if you pay by credit card, it takes you to a different service and they charge an astronomical amount to be able to pay an estimated payment with the IRS. Okay, so let's avoid that. See how we're doing time. Okay. So what percentage do you recommend setting aside for taxes? This is also in the top 5 questions that I get. And I love this question because it means you're thinking about putting money aside. Because the worst case scenario is that whatever you earn in your business, you're taking and using personally. And then come April 15th or during the quarterly estimated payments, and you have, let's just say, a $10,000 tax bill and you have no money because you've been just having it flow through to your personal, whatever you've earned, you've put into there. So the short answer for how much to set aside for taxes is 40%. Okay, so you would want to increase that a little bit more if you're in a state that has state income taxes. The reason we say 40%, that's not just me, it's standard, is it covers 15.3% of your payroll taxes. Now, when you're an employee, you have to pay employee payroll taxes. But now as a business owner, you have to pay both the employee and the employer portion. So the remainder of that 40% minus 15% is pretty much for federal income taxes. And you do have a bit of a cushion, but it depends on what your tax break is for federal. But also, I want you putting that aside because you can either be saving it for taxes, or hopefully you have a retirement plan with your own business. I really encourage you to listen to the earlier presentations that I gave on taxes and how to be profitable in your private practice, because I talked a lot about the benefits of having a retirement plan. But for the most part, you can save really significantly. That money you're putting aside can be going to your retirement first, because you get a tax break on that for your income taxes. You're still responsible for that 15% of payroll taxes though. Okay, to truly set aside money for taxes, it's best to have a dedicated savings account for taxes. What does that mean? That means that in addition to that business checking account that I told you I really want you to have, I also want you to have a business savings account. I mean, it can be a personal savings account or what have you, but I want you to have a separate account solely for saving for taxes. And that means every month you're just putting an amount into this account. And why do I want you to do that? Because when we see large numbers in our business checking account, it messes with our mind. And there's this thing called the Parkinson's law, where magically, when we see a large amount in our checking account, magically the expenses match that income that's in there. So we want to make sure that you're seeing lower dollars in your checking account because you are putting it aside. So in this case, out of sight, out of mind is a good thing, because you're setting it aside for a particular purpose. If you want to know any more information about this, there's a great resource with Michael Michalowicz on Profit First Professionals, and he teaches you how to have buckets of accounts. Now, his system is way different than I recommend in terms of, I don't think you need all those accounts, but in particular, I do highly recommend that you have a separate account that's set aside for your taxes, okay? Again, you don't want this huge tax bill on April 15th without the money set aside to pay that bill. I absolutely love acronyms, so this is, my acronym is to be like Pam, so put aside money. What bookkeeping software do you recommend? All right, so just to review, as you've heard in my other talks, SimplePractice and other practice management software packages are not accounting systems. So we shouldn't hold them accountable for being an accounting system, okay? They are a fabulous system. I have it myself, of course, and they are fabulous in the reports that they present as well, that in the billing reports. So they show you how much income you have brought in each month. But you want an accounting software package because it doesn't tell you anything about your expenses, right? So not only that, you want to be tracking your income in your accounting software package. So I'm really sorry to say this. As much as I love Excel, Excel is also not an accounting system. But don't kill the messenger, because I really do love Excel. I use Excel still a lot, but it doesn't organize your finances like I'm going to show you with accounting packages. So you need an accounting system, and it doesn't really matter how small you are, that is connected to your bank accounts and will download your information automatically to avoid manual input. So you might think, wow, I have a lot of transactions. I don't want to be entering those into your accounting software. You don't need to. With many of the software packages, it connects to your bank, and so those transactions are downloaded. I still want you reviewing those transactions, but there's not a lot of manual input, okay? So I am very biased because I am a QuickBooks Pro Advisor, which means that they have me on their website as one of their experts who can train people in and answer questions about QuickBooks. But I do highly recommend QuickBooks. It is the most small business minded software I think that's out there. It is form generated, so it is not geared for the accountant. So it wasn't created for an accountant necessarily to use, because it hardly ever talks about debits and credits. The only time that would be is in making journal entries, and you, for the most part, can get away with managing your own software without doing journal entries. But even though it's not geared for the accountant, many accountants do use QuickBooks themselves. I use QuickBooks for all of my personal and professional accounting, but also many accountants are very familiar with it. So for example, with QuickBooks, you are allowed in your software to invite 2 accountants to be on your platform, so they can have, if you want, they can have easy access to software. It's also a great tool for me when I'm working with small business owners, is because they invite me to be onto their QuickBooks, so I do the training right with their QuickBooks. So I'm using their numbers so they can show them in their company instead of with a sample company. Okay, so even though I do highly recommend QuickBooks, there is some training involved, okay? So it's not intuitive. It's not like you all of a sudden bought this monthly software package and you can automatically do it. They do even provide some training for you with QuickBooks, but it does take some time, okay? So there is a learning curve to it. But generally speaking, a therapy practice doesn't have a whole lot of moving parts and is not super complicated accounting-wise. So it's relatively easy to implement, especially because we're in the service industry and we don't have to worry about things like products and inventory and sales tax for the most part. So it's relatively easy, but does take a little bit of training. Okay, this is another question that I get a lot, and what is the difference between an LLC, or what is an LLC, versus what is an S corporation? I want to make sure we're doing well time-wise. Okay, so an LLC is a limited liability corporation, all right? And so it is a legal setup. So it's a legal designation. It is not a tax designation. So you can be an LLC, but still run your income, your expenses, net income through your tax return, through your personal tax return, okay? But the benefit of being in an LLC versus a partnership or a sole proprietorship is you do not have your personal assets exposed in case of litigation. So what does that mean? That means that if you're in a partnership or if you're in a as a sole proprietor and you do not have any kind of incorporation going, so that includes like if you're in a partnership and you're not a PLLC, then you can be exposed to litigation. If you were sued, technically you are exposing your personal assets because you and your company are one and the same when you're not incorporated. All right. But I've mentioned in both of my seminars that I am not an LLC. I have chosen in my business to simply be a sole proprietorship. I have tons of malpractice insurance. I have to have even more malpractice insurance because I do this crisis intervention work. And so I feel comfortable that my exposure is very, very low. But there are certain instances that I really want to spell out that I have not spelled out before on when I would recommend an LLC. After meeting with a lot of therapists who have their own practices, I draw the line at certain conditions. And that one main condition is if you have employees. So if you have employees, I definitely want your personal assets protected. Okay. Also, if you have 1099 independent contractors, I may also recommend that you have an LLC because I want to really understand if you truly have independent contractors versus employees, because you don't, as a business owner, don't get to make that decision on whether or not they're an independent contractor or an employee. The IRS really gets to make that decision. So there's a 20-factor test on whether or not somebody's an independent contractor or an employee, but the default is pretty much that they're an employee. But when you have an employee, there are all kinds of issues. Employees can claim anything, and it could be very litigious. So I don't want your personal assets exposed there. So I think that would be highly worth it to be an LLC. And the other condition that I think is a deal breaker for being a sole proprietor and exposing your assets is if you have associates that are depending on your license. I think whenever I've got other people and I have a little less control over my own license and my own work, then I think I need some more protection, okay, other than just my malpractice insurance. An LLC protects you from exposing your personal assets as part of the business, particularly in litigation. Okay, so that's why you would get that protection. But for people in California and other states, I don't know how many other states charge a pretty high fee to be an LLC, but we have to pay in California for an LLC, we have to pay an $800 minimum franchise tax board payment. So that's pretty hefty, so of a fee to pay just to be an LLC. So, you want to make sure that it's the right decision. But for those instances, especially with employees, definitely want to be an LLC. Now, being an LLC does not guarantee that you are an S Corp. So an S Corp is a tax classification. So you can be an LLC and still have everything run through your personal tax return. Okay, it's called a single member filing LLC. An S corporation is a particular tax designation that provides a liability protection and passes income through to the owners. So what it is you are now considered a shareholder of your own S Corp and an employee of your S Corp. So the main reason why people form S corporations, become an S corporation, is to save on payroll taxes. But it's very complicated in terms of when you get to save on payroll taxes. So it's not definitely for everybody. I do know many accountants who just automatically say business owners should automatically become an S Corp. I don't agree. I don't agree because I've seen how people don't really understand, and I've seen how people don't take payroll. So When you're an S Corp, you absolutely have to have a tax professional helping you because you need to have somebody doing your payroll. The whole reason that the IRS has created S Corps is because you are considered an employee who gets a salary. Okay, so that's the long version, but it is very complicated. So definitely let's talk if you still have questions about that. But I just want you to know that there is a difference between an LLC and an S Corp. Also, people automatically think, okay, I want to be an S Corp. But you can't just have it be effective immediately. You have to file a form with the IRS, and you have to file it within 2 months and 15 days of that tax year in order to be able to qualify to be an S Corp for that tax year. Okay. Okay, how do you determine when to pay yourself? What is the difference between paying yourself as a 1099 or as a W-2 employee? Okay, so I'm going to separate this for the people who are sole proprietors versus the people who are S corporations. So paying yourself as a sole proprietor, when you are a sole proprietorship, you and your company are one and the same, okay? So you're not taking a salary. You're not a 1099 or a W-2 employee as a sole proprietor. What you are taking from your business when you want to use it for personal reasons and for your personal budget, you are taking a draw from your business, okay? So it's called owner's draw. And so ultimately, you want to be making a market rate salary in your business, but you have to grow to get there, right? So as you grow, you only take money from your business after, so you only do the owner's draw after you have 1, saved for taxes, and that we recommend at 40%. 2, included in that tax savings may be your retirement, but you can also additionally save some for your retirement. And 3, I want you to leave a reserve in your business for downtimes. So I don't want you taking all of your net income minus the 40%. I don't want you taking 60% of your net income. I want you to have a little bit in your business as a reserve. For example, let's just say that for your family budget, you need to pay yourself through owner's draw $1,500 a month. Let's just say, I'm just doing that as, hold on, let me just make sure I did my numbers right. Yes, okay, I did. All right, so let's say you have to have $1,500 that you want to pay yourself every month from your business to meet your own personal budget, personal expenses and everything. So if you're taking $1,500 out, that represents 60%, because remember, we're already going to pay ourselves, put aside 40% for taxes. So that $1,500 represents 60%. In order for you to collect $1,500 a month, you have to have earned net income of $2,500. So that's 100%. So 40% of that is $1,000. 40% of the $2,500, so you're putting $1,000 to savings, and then you're able to draw $1,500. Now, it actually should be more than $2,500 because I want you to have a little bit of a reserve in your business for those downtimes. So let's say that you want to have $1,500 taken out every month, but you know there are some months that are slower months. So let's say that you are really dependent on the school schedule. So you're a school counselor, you have most of your families take the summers off and you're not seeing as many clients during the summer, but you still want to take that $1,500. So if you've taken everything out of your business each month and don't have any kind of reserve, there's nothing really to pull from for that $1,500. So that's why I want you to have a reserve for those slower months. All right, now that's if you're a sole proprietorship. So that's kind of how you pay yourself. For S corporations, you are not one and the same with your business, right? You are an employee of your S corporations, and that means you're taking a salary. So the IRS says if you are an S corp employee, you have to take a reasonable salary. Now that reasonable is put in quotations because what that reasonable salary is a little nebulous. So they haven't specifically said you have to make this amount of money because everybody's business is different. So you really do need a tax professional and a payroll service on board to be able to compute your payroll. do not mess with payroll. This is a highly big topic item for the IRS. What's the most economical way to handle payroll with an S Corp? So there are payroll companies like Gusto and Patriot that have lower costs than some of your bigger payroll companies like Paychex or ADP. But again, you want to check into with the lower costs, you know, you might not be getting as much in services, or it might not be as intuitive or as much hand holding. So you just want to look into that. But I do know many people who have gone with a lower cost service when they're a smaller business. Many accounting firms will be able to handle your payroll filings and calculations if they're bigger accounting firms. Again, like I, as an accountant, I don't take on payroll because it's just such a big baby that I do not do it myself, and I'm an accountant. So take heed of that reasonable salary. Some accountants are very aggressive in the determination of that salary, so you just want to make sure you guys are of like mind, because I, again, am really protective of you having peace of mind, and doing that wrong will really send you out of feeling peace. So in business downtimes, do not drain resources by continuing to pay yourself the same salary. If you aren't making as much, you have to course correct and not necessarily take as much as a salary. So adjust your salary but maintain those business reserves. All right, what factors do you consider to decide? Let's see, I'm going to do it time-wise. To use a third party to manage business finances. So tax professionals, business finances are different than taxes. So you might have somebody who prepares your tax return, but you might have somebody else who does more of the bookkeeping and accounting for you. Having your own business is a great time, like I've mentioned, to consider having a tax professional prepare your taxes. Peace of mind is a beautiful thing. Spend the money for a true professional. You and your business are worth it. And then what I've seen for managing your accounting books is how much do you need to be in control, and you know, honor that level. Like if you really want to be in your books and maintain control, and the idea of somebody else having access to your accounting books and knowing what your income is and such, if that is so uncomfortable for you, that's no problem. But let's honor the level of control that you want. It's common now that bookkeeping firms are offering these packages. So you might be paying these monthly fees. Typically the tax return preparation is part of that bundle, but you want to make sure that it does include that. And when I say monthly fees, I mean like as much as, like sometimes the minimums are like $150 a month, which might sound like a lot, and of course it is a lot, but what are they doing for that $150? And did you not have to like deal with the minutia of reconciling your bank accounts and preparing those reports? You still need to be in your business, but maybe you know, that $150, while it might sound like a lot, it's also worth your peace of mind, and to maybe not have to worry about some of the smaller items with accounting. And how responsive will they be to your questions? So how much does that monthly fee include with being able to ask questions, and how available are they to you? Even though you have somebody doing your monthly accounting, you still need to know your business numbers. So I have a lot of people tell me, oh, when I ask them, you know, how do you handle your accounting in your business? Oh, I have a bookkeeper and I have a tax preparer, so, you know, we don't need to talk. But I do find that that really is sometimes an excuse for saying, I don't understand any of this and I don't want to get into the business of learning my numbers. But as I've been harping on, there are many numbers you still need to know. How do I set up a practice when licensed in multiple states? You guys are going to have my slides, so I won't go through all of this, but I will let you know that this is a huge complicated answer. As you can see, I've got several boxes about it. Okay, so this is when we really need to not only get a tax expert, but a tax expert who is familiar with multiple state tax returns. Okay, so the bottom line is you do need to keep track of how much, let's say you're licensed in several different states. or let's just say 2. You're licensed in 2 different states. You do need to keep track of the clients and the income that you're earning in one state versus another. You do have to file multiples. You likely have to file multiple state returns unless one of those states is a state that doesn't collect state income tax. However, there is good news that you are not doubly taxed on the same income, but you do need to keep it separate. So that is something to be aware of. We can talk further if you want to reach out to me if you are in that category, but I thought that was an excellent question. Can you provide a list of IRS deduction categories relevant to therapists? Well, really, it's the same that other people are, but I'm just going to highlight a couple of topics. Okay, so one of the reasons that I say you really want to have your own business checking account is because you want your expenses to be paid out of that. If you are paying through a number of different sources some business expenses, you may miss a lot. So if you're personally paying for your insurance, liability insurance, you might forget that that was a deduction you got to take on your business tax returns. So we want to make sure we're paying business expenses out of your business account to have a clear paper trail and to make sure you aren't missing anything. So some things that people sometimes tend to forget are the books that they're putting into their libraries. So, you know, your educational books that you're reading, malpractice insurance, continuing ed. Those are some of the common ones that are relevant to most all therapists. There are many expenses where we only get to take a portion of those expenses because we have to apply what the business use is. So, for example, if you do have some mileage, or if you use your car for business purposes, then you either get to take the standard deduction, the standard mileage related to those business miles, or you take a business percentage of your car use that's for the car expenses, okay? So you can't do both. It's one or the other. It's easiest to go with your business miles and apply the IRS percentage that they give you. It's like usually in the 50-cent range, 57 cents or something per mile, but that's for business. That's the easiest way to do it. The rules for a home office deduction are very strict. Right now, you are seeing me in my home office. I am 100%, except for my crisis intervention, I'm 100% telehealth. And even I do not claim a home business deduction, even though all my stuff is done here, because I don't meet the requirements, because on this desk, I also pay bills, personal bills. I also do my own stuff on computer scrapbooking and stuff like that. So it's not a dedicated space strictly for business. So they're very strict about those rules. And so make sure you're also only using the business percentage for some capital expenditures too, like computers, printers, office equipment, stuff like that. Right, sorry to be Debbie Downer, but consultations are deductible, but your own therapy is not. I just want to spend a second on this because sometimes people ask me about this, and I just want to kind of go over the theory, the psychology behind this. So if you are in private practice and do not take insurance, you are asking your clients to pay for their own therapy. And if you do not engage in your own therapy as a therapist, with the idea that you'll only do it if you get to deduct it as a business expense, then how are you able to really convince your clients that this is a legitimate expense that they personally should be paying? Okay, so that's what kind of want to put out there. And when whoever is paying for the service really kind of gets to direct some ways of how you do business. That's why I don't take health insurance in my practice, is because I don't want anybody else telling me how I'm going to practice and what I'm going to be reimbursed for which diagnoses and whether or not they fit the criteria. But as therapists, you know, one of the first things that they train us in therapy school is that we have to have our own therapist, because this is a very, very stressful job. It would be very, very similar to a doctor. Let's just say an internist. We would want him to go to the doctor, but if he needed to go to the doctor, but he wouldn't only go to the doctor if he could deduct his own personal medical expenses. So just wanted to talk a little bit about that psychology. Okay, so also I've gotten some questions at times about travel. That's business travel when you're doing some business on the side. That's not deductible, because that wasn't the purpose of the travel, was for the business, so you can't deduct that. Items that you use for your own personal use, even if you sell them in your business, that also is not deductible. All right, I think this is one of my last questions, but this is one of my favorite ones. So what are some of the biggest mistakes private practice owners make? Okay, so the first one is the most basic, is just not having a separate account for business and personal. The other one is commingling funds. So I see, even when you have your own business account, I see people paying personal expenses through their business account. Big no-no. We don't want commingling of funds. If the IRS is trying to say, tell me you're a legitimate business, then we want it legitimately separate from our personal, okay? Now, this commingling of funds does not include two things. It does not include when you want to invest money in your business, so we call that seed money. Typically, when you're starting a private practice, if you don't have money to buy some of your equipment, to buy some of your, like, SimplePractice and such like that, you need a big investment of money. So I really recommend that you do that in lump sums, as opposed to just paying personally for it. It just transfer a lump sum into that business checking account as seed money. And then that also does not include any owner's draw or any payroll that you're paying yourself, okay? So that's not considered commingling funds. It's when you're paying personal expenses with business funds. All right, the other big mistake that I see is not knowing how much things cost in our business. So there are a lot of expenses, like Psychology Today profile, like SimplePractice, like I pay Adobe for, it really irks me, but I pay $15 a month for Adobe to have some features with PDFs. There are things that you have to automatically pay, but the problem with not looking at your numbers on a monthly basis is you're not aware of how much those things are. So I will ask people, you know, how much did that cost you? Oh, I don't know, it's just automatically taken out of my account. Okay, but I want you to be able to feel the burn of that expense each month by looking at it coming out of your account and doing a little mental test. Did I get the value for that expense? The reason the PDF thing bugs me is because I don't really feel like I'm getting that value every month. So it's like, okay, I really got to work more on my PDFs because it's only $15. But you know what? When we keep saying it's only this, it's only that, those things add up. All right. Okay, another really big mistake I see is when people get a little fancy and want to expand their business, and they think that they get to choose who they work with as either an independent contractor or an employee. The IRS default, if you're not sure, is that they're an employee, because they want those withholdings throughout the year, okay? Another common mistake I see with those in helping professions is trying to be everything to everybody and offering every service without a focus. It's one of the biggest reasons why I think people have a difficult time niching down their business, is because they think they're not everything to everybody. This also includes taking such good care of the people that you work with. So you may have other licensed professionals that you work with, and you're paying them such a large percentage of what your insurance company is paying you, such a large portion of the fee, and you've made it, you're giving them so many perks to work with you, that you may be actually losing money to have them be on board. Not being current with your books. You can't make current decisions if your numbers and data are old. So I want you to stay current with your billing too, particularly because you probably have some delays in insurance payers paying you in timely manner. I don't know because I don't take insurance, but I would imagine it's probably between 30 and 60, maybe even 90 days. So that delay is even greater if you aren't doing your regular billing. So, you know, really put into place some regular habits of doing your billing. All right. Oh, I guess this wasn't my last question. How much time should one allot to managing finances? That's really more in terms, I can't give you like a real formula, but I have listed all the things that I want you to be able to do. And I find that once you spend a little bit of time in your business, it gets a little bit more enjoyable. Dare I say even fun. That so you want to be recording your activity regularly. Okay, you want to be recording it every day if you can on billing the clients right after you see them. Every week you want to record your business activity. Every month you want to be reconciling your accounts. Reconciling is the #1 activity that I highly recommend. We don't have time to be able to go through what that actually means, but reconcile. Every month, know your net income from last month and year to date, and review your monthly financial goals. So monthly financial goals means whatever your goal is that you wanted to earn for this year, how are you doing? We're now into the 8th month of this year, so are you on track to be making what you want to be making for this year? Those are financial goals, but you might also do all of your goals that you want to just see if you're on track. And make sure that you are transferring money into your savings for every tax month. I just want to kind of, I'm at the end almost, sorry. I just want to leave you with that my first accounting client was my favorite client. He retired years later, but he was a lawyer. And so lawyers as therapists, their commodity is their time, right? So he was his time was very precious to him because he would bill his clients, and he tracked all of his time. But one of the things that he would have me do, I was his accountant, and he would have me add up all of his admin time for the month. And when I would present him with how much he billed and how much was admin time, he was so discouraged when he had more admin time than he wanted. Like when I say admin time, I mean he recorded everything. If I asked him a question, he recorded that time. If he was doing emails, he recorded that time. So he knew very much how much he was working in his business, but he thought it was a detriment to his business because that was time he wasn't billing his clients. I, on the other hand, had a totally different mindset because I loved how much he was in his business. He was networking, he was marketing, he was talking about the accounting. He was really in the numbers. So think of it as productive time where it's about long-term goals and your growth. So if that helps to kind of think of the admin time as also productive in a different way though, and also valuable. So time is also your #1 product. If you aren't meeting with people, you aren't able to charge. However, your admin time is really productive. So, you know, we want to make sure we're sharpening that saw. All right, so just as a summary, who said that you weren't supposed to enjoy being a business owner? You know, there's a lot of times that people think of the accounting and the bookkeeping and the tax return and the quarterly financial statements as all like burdens to them. But what if you were to flip that switch and to flip the script? Right? So you started your own business because you want to do things your way. And now you're learning new ways of showing up for yourself and benefiting from your business. So working with the numbers of your business can be empowering, goal-directed, and easier than you think. Odds are pretty good that as a therapist, you have a passion as a lifelong learner. So what if you learned how to manage your finances really well? Because right now is the time to let go of that automatic story that you aren't good with money. Let's kick mind clutter to the curb. This is my contact information. If you would like to contact me, I have been so lucky to be able to meet with really fabulous therapists like yourselves who are in the business, in your own business, doing amazing work. I just want to point out that look at this picture and see how happy the servers are. They are benefiting too, right? So that's what you get to feel. You get to feel like you also get to benefit as a business owner. All right, so that's it for me, Nick.
Thank you so much, Edie. That was such insightful content. We appreciate it as always, and looking forward to working with you again in the future. Just want to remind everybody that this webinar will be sent out in our follow-up email going out tomorrow morning. We also are offering those interested in SimplePractice an exclusive 2-month offer for attending this webinar. You'll find all that information in the follow-up email as well. Thank you all for the work that you do each and every day. We'll see you again soon.